Hey, it's Michael Saul, but everybody calls me Tiny, so you might as well too. And in this video, I am going to expose the percentage gain scam. I'm going to give you some updates from last week's video, and I'm going to talk about two new stocks to watch. This is for the week of August 29th, 2016. Sad panda over here because summer is coming to a close. I don't care what the calendar says. In Jersey, the summer ends on Labor Day. I don't know about you, maybe New York too. I'm, of course, kidding. Everywhere, summer ends on Labor Day, except where it's summer all year freaking round, which I am insanely jealous because I really fell in love with the beach this year. That's enough talking. Let's talk about what I analyzed in last week's video. So first up is the dollar versus the Japanese yen. Wedge pattern, came out of it on Sunday, not big, but just squirted out, went sideways, and then Friday, Fed Chairman Yellen said some things, and there were some other things said, and okay, the rate hike is looking more and more likely for this year, and the dollar exploded, or went higher. I don't know if this is really an explosion. This more looks like an explosion, but it went higher. Nice push up, okay? Last week, I talked about this point being key and pivotal. Wow. What happens if we get to that low? Do we see some initiative selling go through it? Do we see some responsive buying pick it up? Or do we break it, trap the aggressive shorts, and then see some responsive buying come in and turn it? But we didn't get to that low yet. Okay, now I'm not just ignoring this. Hey, this could be the start of something. I just don't think so. Not enough evidence yet. We have a lower high in here that came after a lower low. So we're still in a short-term downtrend here. We have the 50-day moving average may come in as resistance. We have this swing high may come in as resistance. So we have to wait and see. I'm not being stubborn here and saying, oh no, this is fake, this isn't real. Let's see if it is or not. Maybe it is the low. Okay, maybe, hey, you know what? Nice round number down here. This is where it turned off of. You notice we never really got more than a day, right? This was it. The only day that closed below it. Okay, that number. This traded below it. This day traded below it but came above it. This day tested it. These days tested it. So, yeah, maybe it is the low. I am not convinced it is yet. I want to wait and see if we get any follow-through action to the upside. If not, then there could be a nice opportunity to short this at least down to this pivot and then see what we do from there. Spectrum Pharmaceuticals was one of the stocks I analyzed in last week's video. So Monday, the biotechs popped. Spectrum got above the 200-day moving average but couldn't close there. Tuesday paused. Wednesday came to the downside. Then Thursday and Friday tested and held the 62% retracement. If last week's lows give out, look for a move down to the 5 teens. And then if that gives way, look for a retest down here at 415. Achillian Pharmaceuticals. So this was the stock that had the two triangles, the yellow one inside the white one. So the yellow triangle, we saw a break to the upside, but it couldn't last, and then we saw a break to the downside. And last week I did warn you could go look at that video, that you have to really pay attention to what happens when we get to these white lines. They could hold it up, and it looks like they did both places. So now we want to see if the white lines get broken, if the break actually sticks, and if we see some directional movement out of that. Stock, in my opinion, is still ready to go. We just have to see which way it's going to be. So now I'm going to talk about the percentage gain scam. So what is this all about? Well, you'll see these advertisements or read this hype from people like Kachingo and the other gurus, and they'll talk about how they made this amount of money on this trade, this percentage gain on this trade. And like everything else, well, most of the things that they say are not true at all, but a lot of it is half-truths. So maybe on that one trade, that percentage gain was realized, but what the scam is they're trying to act like you could have potentially made this percentage gain in your account. No. Very few traders I know take their entire account and throw it into one position. If you did that, then yeah, okay, you had the potential to make that percentage gain. Of course, if they're not lying to you about the entry and exit, which is another different story. All right, anyway, but most traders I know put in multiple positions into one account, even if it's 2 or 3. So assuming you're not using margin, and by the way, if you do use margin, then yeah, there's a chance to make more than the percentage gain claimed. But if just based on a cash amount, okay, you can't keep score in your account just off of one trade if you have multiple trades going on in your account. So last week, the Inner Circle, the Winning Edge Trader Inner Circle, closed out a position in Puma Biotechnology. It was not my choice, just happened to be on a trailing stop. So we got in at 48.63. We sold half at 55.63. And then we moved our stops, and it stopped out on Thursday on a trailing stop at 55.63. So limit order to get in, limit order to get out at half. The second half, more than likely you could have gotten the price, but maybe you would have got slips or whatever. But calling it a 7-point gain. So on a $48.63 stock, 7 points is 14.5 or 0.6%, whatever it is. Now, look, I don't want to fry my brain with math here, so this is what I'm going to do for the purpose of this lesson. Okay, I'm going to round up the stock price to $50, so long at 50, out at 57 for a $7 gain. That doesn't change. All right, so we're just going to call it a 14% gain. Now, on that one trade, great, awesome, 14%. But the whole story is not being told here. What was the initial stop loss on this trade? Well, the initial stop loss on this trade was $4.50. So you may be watching this and go, holy cow, $4.50 on a $48.63 stock. Oh my goodness, that's a big percentage risk. And if we use the $50 stock, hopefully you don't talk in this excited, high voice tone, but anyway, on a $50 stock, that would be 9%. Wow, that's crazy. You're risking 9% a trade. But like I tell the members of the Inner Circle, and I'm going to tell you, no, that's not the case. That's not how you size out a position. You size out the position based on what your maximum risk is. It has nothing to do with the percentage or the points on the stop. Let me show you how this works. So all numbers are arbitrary, and for example, use only. Your mileage may vary. I don't know how much is in your account. I don't know what your situation is. I don't know what your risk tolerance is. But let's say your account is $50,000. Your max risk per trade, you say every trade I put on, the most I'm risking is $1,000. That's 2%. It's a rule of thumb that is quoted by many, so I'm using it here. Like I said, I don't know. Maybe your risk tolerance is higher. Maybe you like to have a more volatile account. Maybe you have a smaller account, so you risk more. Maybe you have a larger account, so you risk less. I don't know, but we're going to use 2%. If your stop loss on the trade, right, the stop loss should never be around a dollar amount that's just, I'm just going to risk an arbitrary $2 or $3. No. Risked $4.50 because that was based on a calculation with the average to range, which I'll go over in another video. It's beyond the scope of this video. But anyway, it was $4.50. So to risk $1,000, you would put on 220 shares. That's $990. We'll save the 10 for commissions, I guess, or whatever it is. So it's almost $1,000. Now, a $7 gain, which you could have potentially made if you took the trade, times 220 shares is $1,540. That $1,540, based on your risk, which is the professional way to journal your trades, is 3.08% gain, less commissions, and possible slippage. Like I said, there could have been potential slippage on the second half. The entry was a limit. The first half out was a limit, etc. But assuming there wasn't, 3.08%. Now, that is not 14%, not even close. Okay, I guess it's, I don't know, more than 20% from it. But I mean, so what? It's not 14%. It's still a pretty good gain, though, on one trade. All right, if you are an active trader, you have to be aware of this. If you're just going to take a position and just hold it forever, then fine. You can worry about putting in a bigger chunk of your account in if you want, or whatever you're going to do, however you divide it. But if you're an active trader, okay, in my opinion, I've been doing this for a long time, this is the way you have to lay out your trades. You pick your maximum risk per trade. Again, that's up to you. And then you work backwards. What's the stop loss? How many shares can I take in order to stay within that? Okay? Any questions? As always, winning edge, sure I'm spelling it right, trader@gmail.com. If you need me to explain it, if you need me to get on the phone with you, email me, give me your phone number, and I will actually give you a call. Yes, I actually do use the phone. Okay. Not very often. All right, so let's talk about 2 new stocks for this week. So here they are. The first one is CLVS, which is Clovis Oncology. Now, Clovis had a nice base pattern. I got to get rid of this here. There we go. So it had a nice base pattern, nice little handle here, broke above the 200-day moving average, and is now in a consolidation. So now we want to see what happens here. Can it continue? Can it break out here? Can it get above here? And how far can it go? We have a couple of points to watch. First, we have the top of this range, because this was a huge gap here. So we have the top of this range here, I don't know, 36 area or something, 35.88, what is it, 35.93, let's see what it is. Okay, so here's one, 36.42. It's a pretty good move if it can get there. Now, of course, I like to wait for confirmation, and then I like to put stops where the pattern would be wrong. Okay, second stock to look at is Tableau Software, and that is symbol is data or data, depending on, it's actually DATA is the symbol. Name is Tableau Software, but I don't know if you say data or data. And this had a beautiful push up. See how it got right above the 200-day moving average, but and I know technical analysis and charts don't work and all that stuff that people want to say. It's all coincidence, I get it, but notice that it could not stay above the 200-day moving average, came back down, but now it is in a nice coil here, and this coil is at a key decision area. Okay, more than likely, we are not going to stay at the 200-day moving average. We could stay there for another week. We could stay there for longer than that, but we're going to get a move eventually away from it, right? You saw it happen here. So we hung around the 200-day, then we broke down. And look at this, just one of my favorite patterns. Just consolidating right underneath the 200-day, and then boom, right down, and we came up again, hung around it, and moved away. So there is a chance that we can get a gap fill. This left a nasty gap, so this is into the mid-70s here. There's a chance that it stalls out right in the low 70s, or there is a chance that this was all corrective, this was a last hurrah, and it rolls back over. Got to wait and see and wait for confirmation. That's it. Have a great last week of the summer, and I will speak to you in next week's video. Again, winningedgetrader@gmail.com with any questions or comments. Have a great trading week.